Thank you all for your valuable time. And the whole idea today is to brief you on how we look at the markets for the month of April. Now, it's been a very challenging times last 5 to 6 months, especially, considering the kind of sell-off which we had. Really, it was an unexpected move. It came as a surprise to many, and it was more of a record-breaking move because what we read in the papers was 5 months back-to-back weakness in the indices was not seen since long. I think after 1996, this was the phenomena, at least in the indices, where we saw a month-on-month correction which extended almost for 5 months. Luckily, March was that month where we did get a respite rally, and it really was a very strong respite rally, which was more of, provided much needed solace for many of the portfolios which were stuck in the last 5 months. So just to take over this presentation, March series was one of the best months where we saw a recovery of almost over 1,000 points. That has come from the support base of around 2200. Highly oversold technical parameters, short covering in the derivative segment were primarily the reasons which triggered this rally. This was pending for long, and when it came, the recovery rally has really come in strong and hard. So, as I mentioned, India VIX, this is the volatility index which we kind of do have a check on, but really it has been surprising that the last 4 to 5 months we have not seen any major move in the VIX. It continues to be around 13%, and really we had a VIX picking up lately, which was more of a surprise factor because there was a time when your markets were recovering, moving up. And even India VIX was moving up. It went till around 16% in the last few trading sessions. And, the question which was bothering many was, why is the market recovering and even VIX is going up? But really, we attribute VIX to a scenario where, you have an inverse correlation with VIX and Nifty. But this was a case where a lot of option writers, especially the call writers, who were prevalent, who have been shorting the markets, were caught on the wrong foot. And really the covering or buying of the calls was what did drive VIX till 16%. But luckily, things are back in control. VIX is at 13%, and it just means that stability is getting back in the system. Now, if you look at the rollovers, when we say rollovers, it is how much positions are carried over from the month of March to the April series. Nifty rollover stands at around 76%. So the positive side to this is that if you look at the rollovers in the last 3 months, the rollovers were on an average were around 81%, and majorly there were short rules in the system which kept on rolling. But the positive part here is 76 versus 81. It just shows that the quantum of shorts being rolled over from the month of March to April is lesser than what has been seen in the last 3 months. So that's one silver lining or positive aspect if you would look to the month of April. Now, the option data is suggestive of 23,500 strike in calls and puts to be having a significant open interest positioning. When I say that they have significant open interest, means a lot of option writers have concentrated their bets at the single strike of 23,500. Normally we see this phenomena when people believe that the markets might be neutral or might be choppy in a broader range. So to take advantage of a range bound or to play a time value depth scenario, you short a single strike calls and puts where you expect the market to be in a range. So the range which is coming out is 23,000 support, 24,000 resistance. If you were to play out this range, then the short straddle strategy comes into play, which I will explain you in detail as we go into the presentation about how you would play out this move. The strategy is discussed in the later half of this presentation. Price technical level to look forward to for this month, that is the month of April, is the support of 23,800 to 850, and 22,900 is the support. And on the upper end, I think there's some the typo error here, that the resistance is roughly around 24,200 and the support is around 23,800 to 850. So 23,800, 24,200, this is the broader range you are going to work with for the month of April. Now, how do we look? What is the roadmap for the month of April? Now, here the view is that the follow-through momentum might see the Nifty head up for levels of 24,200, 250 odd zone. But somewhere this follow-up momentum might fade out once we reach the zone of 24,200. So at the levels of 23,500, 600 where we close today, still I believe there is one more momentum rally which is pending, with carry forward momentum rally, which might see the Nifty break the psychological mark of 24,000, go till around 24,200. That is the directional view which we look forward to, and we hold to this view for the month of April. So still there is some more legs left in this rally till 24,200, 300. That is the expectation for the April month. Now, seasonality factor, if you look at it, is that in the last 10 April series, Nifty has closed lower only twice. So April traditionally on a seasonality basis is known to be a positive month. And this is the month where you have your quarterly numbers or result season coming in for most of the companies. And what happens is, in such times, the play or the trades for the market becomes more stock specific than index specific. And this is normally the time when the index trades in a range or on a positive tinge, since we have a carry forward momentum from the prior month. Now, Bank Nifty is the stronger of the two indices. And here with the RBI policy, which is due on 7th to 9th of April, clearly there is more momentum in this space. So if you're kind of searching for trades from the short-term perspective, there is room for 52,700 to 53,000 in the bank index. The support for the banking is at 50,500. Rollovers has been good for the bank index, 76% at par with the last 3-month averages. But broadly, if you look at the rally which the bank index had from a 48,000 level, it has been a one-way rally, and a lot of long bets from the month of March has been taken over to the month of April. So that's where we are positive on. So the suggestion is, if you plan to go long on the index, banking has momentum, banking has strength. From short-term traders, weekly traders, banking is the index you need to look forward to. Now, the question which most of us ask is that, is a bottom in place for the markets? Now, because we had a sharp 15 plus correction in the last 5 months, and really, those were nervous moments, and this recovery really comes in as more of a solace, and really whether continues from here or you have this choppy moments is what the question mark is. So first, addressing the first part of the question is bottom. Yes, it has been done at least for the next 2 to 3 months. That is the conclusive evidence you can draw looking at the FII piece of data, looking at the price structures. At least that is conclusive. Now, the carry forward momentum from here, is it going to be strong as we saw in the month of March? The answer is no. It is going to take a time to digest the kind of volatility which we had in the last 2 months. There is a scenario where the markets might be in a range, but they are going to see buying on a dip scenario. So really the supports of 23,000 is going to come into play, and those are supports which are going to see help the markets in case of any fall or minor dips, which is going to cushion or see buyers getting in at lower levels of 23,000. So that is how we look at the markets from the short to medium term perspective. The long short ratio. Now, when we say a long short ratio, it is how the FIIs position themselves in the index future segment. And if you have been noting this data, 15% longs to compare to around 85% shorts. This scenario was on for the last 3 odd months. And really in the last month, short covering fueled this entire scenario. There was a U-turn in this ratio, and 40% is where we stand today. So really these numbers are improving here. The FII, at least in the index future segment, are positioning themselves very strongly. Now, I've kept a small table here. On the left-hand side of the table, you can see the index futures. If you see from 19th of March onwards to 27th of March, there has been green figures day on day. So that just means that FIIs have been buying on and on, especially the big chunk of these buying numbers came on 20th and 21st of March. So roughly, markets Nifty was roughly around 23,000, 23,400 odd levels, and that is the point where you had those buying numbers in the index futures segment. Now, index futures, when you talk, it is a mix of Nifty, Bank Nifty, and Fin Nifty. So really, short covering buying is evident in index futures. Cash numbers also not have been bad. It's been improving since 20th of March to 27th of March. If you look at the numbers on the right hand side, FIIs have been buying. So slowly, yes, it's too early to comment whether the FIIs are back in the system, but yes, the numbers do say that the stage is improving than what we were in the last 3 to 4 months. Moving on to how the options data is playing out. As I mentioned at the beginning of my commentary here, 23,500, if you look at these vertical bars which I have, the skyscrapers, the red one and the blue one, the biggest of them here on the table is at the strikes of 23,500. And this is the open interest graph, the historical, you can say the bar chart, which is here, the vertical bars, the skyscrapers, the blue is the calls and the red is the puts. Single strike 23,500 is where the entire open interest concentration is. This is for the monthly Nifty open interest positioning. So clearly, whenever as I mentioned, a single strike draws heavy open interest, it means call writers and put writers both are short at a single strike on an expectation of a broader band of 23,000 to 24,000. So these option writers really don't want to time the directional moves. They are very comfortable writing the positions when they feel the markets are going to be choppy but range bound. So you sell options at a single strike. Maybe just to cover out your risks, you buy a deeply out of the money options, which I will later explain in the strategy. But this is what the strategy is playing out. That is the sense I draw looking at the options action. A broad action looking at the sector specific action based on rollovers. There have been positive traction in cement, realty, metals, power and banking. So keep a watch on these 5 sectors. If the Nifty recovers, when we talk of Nifty going to 24,200, we are looking at these 5 sectors to be the top performing bets. So cement and realty, these are the top bets. Banking, this is more of a momentum driven rally where we anticipate ahead of the RBI event on 7th to 9th of April. Power and metals may carry forward the momentum which it has garnered from the month of March. Short bets are prevalent in IT. IT will report the results from the first or second week of the month. So do not go aggressively gung-ho or bullish on the IT space. Very few names have bullish price setups. Majority of them still are in bearish mode. So maybe you might have a small relief rally kind of scenario on short covering ahead of the results, but don't get carried away too much into this. Overall, the positioning on derivative side and the technical setups in IT continues to be short. We will update you in case there is any reversal, but as the data reads, majority of the IT names are on the short side. Now, as I mentioned, FII's ratio has been improving 11, 18, 16 to 40. So that's a good sign. Today, the markets were a bit dull because it's a truncated week. It's 31st of the last day of the financial year. And given that scenario, the markets would face some pressure. So really, we are positive for the month of April. 24,000, 24,200 is the levels we look forward to. Now, why we are very keen on 24,200 is because if you look at the entire move from 2200 to 2600, what we do is we use a Fibonacci retracement theory where a minimum 50% recovery from the bottom of 22,000 roughly coincides around 24,150 to 200. So this is the minimum targets we are working with right now. We want to take this step by step and not jump the gun and present you huge targets. Right now for the month of April, 24,150, 200 is the upside which we look at if you are planning for directional trades. As I mentioned, support is around 23,000. The longer term support is 22,000, but you can work with your long bets with an intermediate support of 23,000. What are the news you need to keep an eye on in the month of April? One is Trump tariff plans. Really, the US tariff has been a pain point for the market, and 2nd of April is one more important date which the market eagerly looks forward to as to what the new how the tariff plans will unfold in US. So although majority of these thought processes have been discounted, but still it is how the actual reading comes out on the 2nd of April. So that is what the market will wait for and watch. RBI policy on 9th. Here the expectations are that there might be a rate cut. That is the expectation. Actually, how things will unfold is a different scenario. But the markets are going with a positive expectation of a possible rate cut, which you can see in the RBI meet on 7 to 9. So expect some momentum-driven uptick in the bank index before that. 52,700, 53,000 is the upside we look forward to. In case these targets are hit by before RBI event, then we suggest to book some profits off the table. Quarterly results and preview start from second week. So after these two events are done, individual stocks will start reporting their numbers, and clearly the action goes on to stock specific names, and index will take a backseat. So stock specific plays, trades, you can look forward to those actions from our research desk, where we would recommend you strategies in stocks and directional calls as the opportunity presents. And you need to keep a tab on geopolitical and global news. Lastly, the strategy which I promised you, which I'll give you for this month, it is a monthly strategy for the Nifty index. Last month, the strategy which we presented, a ratio put spread, has been rewarding. It has given you a return of 1.5-2% on the capital you deployed. It has turned out to be a success. This month, we are giving you out an iron condor strategy, where we are suggesting you to sell a 23,600 call and put together for the monthly expiry. You will get an inflow of 550 to 600 points. Now, when you sell options, you are opening the risk of unlimited risks on either end. So to cover this scenario of unlimited risks because of the volatility nature of the market, you are buying a 23,200 call at 140 at 24,000 call at 130, and you would buy 23,200 put, the lower end of the band, at 145. So net your outflow here is around 250, inflow is 550, so you can expect around 300 to 400 odd points of inflow net in this strategy. And if you get the sweet spot, that is if the exactly Nifty expires around 23,600, maximum 22,000 is the absolute profit which you would make in this strategy. This strategy has a fixed risk structure. So wherever the market, if it were to go below or below 23,200 or above 24,000, you need not worry, because we are all covered in this strategy, because in advance we are buying OTM options which will hedge your risks of any unlimited loss scenario. So a very favorable strategy, more than 3:1 risk reward is what it is offering you. I think this is one of the best ways to approach a volatile and a choppy market, where we believe April month might see 24,000 plus, but eventually it should be choppy or trade in the broader range of 23,000 to 24,000. So this is a broader presentation, a brief roadmap I had for the month of April. Feel free to ask your questions and connect with our research desk for technical and derivative queries. I would like to stop here. Thanks all for your time.
How much is the minimum amount required for option trading in Nifty 50 or Bank Nifty?
Well, see, now the contract size for the index has increased. Priorly, it was around 8 or 9 lakhs on an average. Now it has gone to around 17 to 18 lakhs on an average for both Nifty or Bank Nifty. So lot size for Nifty right now stands at 75, and for the Bank Nifty it stands at 30. So almost the lot size has doubled from what it was earlier. Now, how much money you need, it all depends whether you are an option writer or you are an option buyer. So suppose you are an option buyer, which most of our retail traders are. It completely depends on which strike you select for trading your options. So the rule is, the deeper the strikes you choose from where the spot price is, the cheaper will the costing will work out for you. For example, today if you are at 23,000 in Nifty and you plan to buy a 24,000 call, which is deep out of the money strike, if the premium of it is around 50 odd rupees, then 50 multiplied by the lot size is the costing or the total outflow which you need to give to buy that particular option strike or the contract. So really, which strike to buy, when to buy, how much to buy is obviously your risk, but which and when to buy is what we would take care of from our derivatives desk. So please follow us for our intraday short-term strategies. We have various products designed for you as per as your risk appetite. Choose the product going by your risk, and I think as an option buyer, the money which you invest is comparatively lower. If the success works out for you from a percentage term, it's always great. As an option writer, it is equivalent to trading in futures. So you can expect around 2 lakhs of rough margin which you need to deposit with your broker in case you plan to take an option writing position. This is per lot calculation. This is a rough estimate I'm giving.
What are the things to check before taking an options position?
So again, if you're taking an option position, it all depends how you trade, whether you're an option buyer, you're an option seller, or an option writer. As an option buyer, really, if you were to consider from its a risk management perspective, theoretically your options become zero by expiry, or the money you put in becomes zero. But positively, if you look at it, your risk is in control. When you take the trade, you know in advance what's the max you can lose. So really, if you are trading for short term, your view is based for 3 or 4 days, then you can work with a stop loss here. A stop loss is something which is individual. Some people prefer a small stop loss, some people prefer a bigger stop loss. So it depends on individual risk appetite. But just see to it that whenever you place a stop loss, it should not be so tight that it just takes you out of the trade and then the market reverses and get back to where you all started. So yes, stop loss in option buying you can keep, but it depends on which time of the where you are placed in the expiry, whether the beginning of the expiry, mid-month, or the before expiry. But the thing is, when you're buying option, your risk is under control. Contrary to this, when you're writing option, really you need to be exercising strict stop losses, because here the game gets tough. There is no mercy in this game. If you go wrong, the stop losses the losses go on piling up. There is no stopping it. And option writing is really the game for the HNIs, for people know how to manage their risk, those who have a lot of patience. So yes, for option writers, having a stop loss based on either your risk or based on technical parameters is what I look forward to.
How to understand the OI data?
When you talk about open interest broadly, what comes to your mind is the number of open positions at a given point of time, right? Now, when we say open positions, it can be buying and it can be selling. One thing we need to note that open interest always means fresh positions which are created. So, for example, let me say that I have a buy position. I want to make a buy position in Reliance because I'm bullish. And let's say Raj, who is the other guy at the other end, feels Reliance will go down and he shorts Reliance. So Raj has a negative view, I have a positive view. Both are taking a fresh trade. So when this happens, the open interest goes up by 1. So really, when the open interest picks up, you cannot say which way the market is going, because both buyers and sellers are equally participating in a fresh trade. That is the reason why your open interest picks up. Now, what we do in analytics is we correlate this open interest move to the price move, because at the end of the day, one of us will be winning, either the buyer or the seller. So net, if you take all the trades and you correlate this to the price, you say prices are going up, open interest is going up, we come to the assumption or the conclusion that there is buying. Conversely, if open interest is going up and prices are falling, we come to the conclusion that the smart money or the people who are gaining in this bet is the short money or people who are shorting the stock. So correlate open interest move with the prices, and it's more of an assumption about how you are reading it, but this is how the theoretical aspect works. So yes, there are some questions which I see where to check futures OI build-up or unwinding of index and stocks. If you have you register yourself with JM Financial and you get access to our apps. So I think on our apps, most of these features are available. So do understand where and how to use them from your relationship manager. In case still that's a problem, most of web links or just Google it. You will get a lot of options on internet which give you such services free of charge. Also, NSE has open interest chain where you can see how the open interest is changing. Where is the total open interest? This is not live, but it works maybe with a delay of around 10-15 seconds, but it is workable. So these are some options which you can look forward to. How will Trump traffic affect the market? Deep reversal again? Well, look, whatever policies from US had to happen has happened. So I personally believe that the pain which we went through is behind our back right now. It is just the fear which is riding the system right now. So there will be some bouts of volatility. There will be swings in the market of 300, 500 points plus minus, but this is not the time to get carried away. In fact, in case you get those dips, then be brave and bold enough to buy, because these are short-term factors. Eventually, if you look at the longer-term market, how the market works over a period of 5-10 years, investors always have had their fair share of gains. So these are short pain points in the markets, and the next 2-3 months are going to be volatile, but really buying on dips and if you are trading, selling on resistance is the order of the markets which I see for the next 2-3 months. Supports short term 23,000, longer term 22,000. Will these be broken? No, I feel at least next 2-3 months is what I have addressed in my presentation. So yes, news short term based, be bold, face them, buy on dips. I think the market should reward you. And I think these are the major questions which were there, and rest have been answered. So I think yes, we end our presentation and webinar here. Thanks again for hearing out to us, giving your precious time. And I believe April month, as I mentioned, seasonality factor should work, should be one of those positive months. Even if dips are offered, take it as an opportunity and be bullish on the market. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.